Welcome to Wealth and Wellness with Grace Nabasabla.
Welcome. This is Grace with Wealth and Wellness with Grace. Would you rather have $1 million home or 10 $100,000 homes? This is a really intriguing question. So stick around for the pros, cons, some facts, and what Grace rather does. We'll start with the pros and cons of having a $1 million home. The pros is the prestige. Think about the status that comes with that. You see, the neighborhood, first of all, whatever neighborhood you're in, it's already a status symbol. Invite people to your home. Everybody's amazed. Oh my goodness, you live here? How much does she make? Right? So all that is all the prestige that you get from it and admiration. I'd like that too. Who wouldn't? The other thing is the appreciation. Because like I talked about the stable neighborhood. If you're in this stable neighborhood, so it has a high potential for appreciation. And you always get your money back, or normally you will get your money back whenever you decide to sell. The other thing with having one property is easy management, right? You have one structure, $1 million, right, or more. It's easy to manage. You're dealing with one particular tenant. And now we'll reverse to the cons. You have to consider the upfront costs. So say, for example, the down payment. You see, down payment, you're talking about closing costs, all that is going to be a high price tag compared to the cheaper property. And the other thing we normally don't think about, but we should, is the property taxes, the insurance, the maintenance, everything that comes with obtaining a property. And that's also going to be considered due to the high price of the property. Last but not least is the limited diversification. Because you have one structure, that means you have high risk. Anything happens to that particular tenant and that structure, you're limited. You're stuck. As opposed to if you have 10. And we'll discuss the pros and cons of having 10 $100,000 properties. I like the fact that you can look at the disadvantages of owning $1 million property and then use that as advantages of owning a $100,000 properties. Because the less upfront costs, that's one of the things we mentioned, the low property taxes, insurance, and maintenance. And the other thing is you get to diversify your portfolio. You have 10 as opposed to having one. Even if you have 10 tenants, your vacancy rate can be, say, ideally it's about 10%. You have 9 people who can still continue to pay. And you'll be able to afford your expenses and continue managing those properties accordingly. However, when we think about some challenges, which is going to be the cons, is the management. Because with the more properties also comes the more management. You're dealing with a lot of tenants and you're dealing with a lot of properties. So that can be a challenge of its own. But the way to mitigate that is to get a property manager that can help. The other thing is also making sure you plan for those vacancies. Even if it's 10% vacancy rate, you have to make sure that you plan those vacancies and also have reserves. That will help you in the long term. Last but not least is the increased maintenance and operational costs. You make sure you maintain that property and all those properties. Having timely maintenance is helpful. For example, this year, the heat index has been off the charts. And for some reason, we got so many calls about the ACs. And yet in the spring, we did service the ACs. All the properties were serviced. And we made sure we remind tenants that, first of all, you need to change your filter. And not just changing the filter, you need to keep the thermostat at a stable rate. You can't put the thermostat at 60 right? And it's summer, it's in the hundreds. Don't expect it to maintain at 60. So ideally, you have to give it about 20 temperature differential. So that 20 degrees differential can help with the thermostat not over exhausting itself. So it's a lot of education that's involved, but of course, that comes with the management. So I was able to do that, and also email, sending reminders. If you need any help, let us know, but do not continue setting the thermostat to 60 or even less than 70 because of the challenges that we incurred because of the ACs. And we'll talk about some facts, okay? So I know you all like to see numbers. I do too. So see, we're going to compare the taxes, the insurance, the upfront costs, and also different expenses like maintenance when it comes to owning this particular $100,000 home versus the $1 million home. And when we look at all those expenses, that can give you a good idea what you should do. And then I can mention my buybacks towards the end. So for taxes, I did my research. So we're going to use one of the properties that I manage. It's 308 Alexander Drive, and it's based here in Hammond. And for this particular property, the taxes are about a little over $500. And the insurance, the hazard insurance, about $1,500 to $2,000 at the moment. The maintenance, so maintenance cost is about 1% to 4%. So we'll go to 4%. So the highest to make sure that we have all those numbers together. So 4%. And if we say closing costs and upfront fees, so I normally tell people to think 5% of the closing costs. For this particular property, it was for $100,000 when we bought it. So that would have been $5,000 upfront costs. And now, when we talk about the $1 million property I'm talking about, it's 2 miles away. And the big difference is when you talk about the taxes, this property is located at 801 West Dakota Street in Hammond also. And it's listed for $1 million. For the taxes, it's over $4,000. For the insurance, you're speaking about $5,000 to $30,000, because when I was doing my research, it showed that around $4,000 is the lowest and $15,000 is the mid, which that insurance has really gone up. So we'll probably consider the mid, which is $15,000. And then the maintenance, of course, would have been the 1% to 4%, so which is $40,000 to maintain. That's a lot for just 1 year. So think about that. And also the upfront costs. So the upfront costs would have been the 5%. So that's $50,000, right? Because 5% down payment, even closing costs and a few things like that. But it might even be more based on whatever the property commands and also what your loan program is. Because if you have FHA, it's 3.5% down. Conventional might be 3 to 5%. And if you have VA actually and USDA, that might be 0% down. So you have a lower down payment. But we also have to consider the price of the house also to get to those programs. And just compare and see how much everything adds up to. And the good thing with the mortgage, most likely the person who has the $100,000, they're paying around $600. And yet the one who has the $1 million house is paying over $6,000. That's a big difference. And we compare this based on the interest rates. Right now, it's around 7, so we'll say 7% interest rate, and also having great credit. You see? So if you compare that, that would mean you're paying $6,000 a month in mortgage versus somebody who would have the lower priced home, which is around $600. So what is my take, my buybacks, and what I would consider? I definitely consider my mentor's advice, you see, because I don't do things without doing research. And through my research, say, for example, watching Warren Buffett, he always talks about diversification. And having the 10 homes versus one, that's my way of making sure that I'm diversified. I'm not highly leveraged in this particular one property. And that also helps. Because for him, he talks about considering your numbers. So before you purchase, think about what are your numbers. You don't have to have 160 IQ. But even if you have 120, 100, you can consider your numbers and you can do better than that person who has a higher IQ. That's what he says. And so looking at the numbers, it looks like the person who has a $6,000 mortgage is at a very high risk. Because just imagine if you lose your job. Maybe something happens to you. You see, anything can happen at any time. And you're on a hook for that amount of money. And you're at a high risk because in case you're not able to sell that property at a limited time, guess what happens? You end up in foreclosure. And yes, this particular person who has a lower price home is able to easily sell. And I'll say easily sell because I normally look at the average in the neighborhood. Right now in Baton Rouge, Louisiana, Hammond, it's around 200 to 260. So I normally buy properties which are lower than the average in the neighborhood. So ideally, this $100,000 home is perfect because it's lower than the neighborhood averages. And that also helps because in case you want to rent it, in case you want to sell it, it's easier to always have plan Bs, you see, and have exit strategies. And easier to also finance it. So I hope you've learned a thing or two. If you want to continue in the chat, please, I'd like to hear what your take is, because this is really important. In order to build wealth, in order to accumulate assets, you have to know your numbers. You have to do your research. You have to listen to other people's perspective. And also, you need to share your perspective. And until next time, I'm excited to hear from you. Subscribe and like, comment. See you soon.
Thank you.